Hi, this is Mike, and we're looking at the Bitcoin chart. So, in this video, I'm going to talk about what this price action means and how to get into this trade if you haven't got in already. So, because the move down since the highs only appears to be a wave A zigzag, I assume that we are now in wave B, and we're in this is the first leg up of wave B. So, so what I imagine is happening here is we have more than likely we have this wave A, and then wave B is in progress. So I'll get rid of the larger fib and I'll put in just another one to explain potentially a pullback to either 50% or 0.618, right? We'd have to see how that goes, obviously. But at the small degree, this could be a 5-wave move for wave A. Okay, it looks like a 5-wave move. However, we won't know exactly what's going on until we see more downside if it continues lower. And that right there appears to be the first zigzag occurring. If there's any potential for this to move higher, it's going to happen whether we try to guess what it is or not. But typically, that's what I see first when this type of price action occurs. So the pullback ends up being just like a normal correction for a wave 2, except because it's a wave B, it's actually a little bit more understandable and more predictable because it's only corrective. It's purely corrective. So I think there will be many opportunities to get into this if it doesn't expand to the upside, right? Meaning that if this thing doesn't continue to be like a longer version of a wave A, right? That's something that I can't really predict, right? You can't really predict that type of thing simply because it could be a really big expanded wave A, and this could only be maybe wave 1 of that wave A, right? But nonetheless, a pullback is, going to happen, and whether or not it's going to be a shallow one or a bit deeper, I don't know. We have to wait and see. The confirmation for entry into this trade would have already come at a break of this wave E, simply because that's where the last move started, and then it ended at a break above it. So to me, that's confirmation there. I know that it's pretty far from support, but in saying that, this down here would also be support until wave B ends as well. So down there, right where the wave B started, would be support until this pattern finishes anyway. And by the time that finishes, we don't know where it will be. It might have already expanded higher and that sort of thing. So depending on how you want to trade this, it's going to be either you're long from the lows and just hold on, or you can wait for a pullback if there is one, right? I don't know if there's going to be a pullback. If this is supposed to be moving up in a sharp kind of way, then it may not do that. The other thing that could happen also is that we could just see price consolidate in this area, right? So the idea is that this was a weak wave 1, right? If this was the actual top, right, we would have broke support. Support would have been broken, and that would be bearish. Except because we saw a wave A first, to me, that doesn't seem likely to be the case. At least not at this point, right? At least not at this point. If you want to wait until the rest of this correction unfolds, it's not a bad idea. It's just we're just kind of hoping that it doesn't expand too high, because in order to get into the trade, obviously we'd want the correction to sort of end in the range, and then wait for the D and the E pattern to unfold, because they're the waves that we use to get into the trade with the best possible risk and reward. Now we're just not going to really know, because when when wave one is weak, right, like this, then obviously there's still a bit of weakness going on. Therefore, price may contain and coil up for the last move higher, which may produce sometimes a type of triangle pattern, right? So the triangle pattern, obviously there's a balance between bulls and bears, and it prepares to basically produce the last thrust. It's a lot different than what happened at the lows back in December, when that was a move that was, it already had a lot of pressure building up from the bearishness, and then it just popped higher. And that pop is obviously still going. If this is going to move higher, it's still in progress. So it's still got the potential to move to at least 30,000. But if you look at it from the perspective of a pullback in terms of, like a wave B of a zigzag, then it could extend potentially up to 50%, or even up to 0.618 if things got really crazy, right? And we're not really going to know how high it's going to go until we're in that position where we're counting waves on the way up, type of thing. And you look for the sharpest point, and then you sort of, you make your assumptions based on that. The other thing that could happen, and I'm just presenting you with all these types of views because, at the end of the day, wave one will end up being the shortest wave here. So it doesn't really matter if wave five extends, because I've seen it happen before. Now, I'll give you an example of this. I don't know if you've seen the way that I've labeled the move up since December, but I'll show you, I'll explain what the wave three looks like, right? So we had the initial wave one, we had wave one and wave two, right? Don't know why that line's there. And then we had wave three, right? So wave three started down here. It produced a weak wave one, and then it started to get a bit stronger, wave three, and then wave five of wave three was the sharpest, right? And I believe that was wave three, and then wave four, and then wave five ended up being the sharpest move, right? Because you think about it, wave three of wave three only ended down here, and then it was sort of like needed to break the last high, but then it really thrusted through. Like this is like, if you can't see it, it's like a teacup handle pattern, but with a really small handle, and then it broke up right around that level, right? So you can see that wave five was the strongest move. So in this particular case, there's nothing, because wave three won't be the shortest because wave one was pretty short. Typically in this scenario with this much bullishness, there is a pretty big potential for wave five to be quite extended, right? And all that mania thrust will make it, will send it pretty high, right? And I don't think it's going to be the same for like a lot of, well, actually, I can't really say at all. Some altcoins might go ballistic because of it, right? A lot of pump and dump schemes are probably on their way out. So we just don't know, like, the potential here for wave five to really ratchet up higher impulsively. So there's a pretty good potential for this to continue higher even after we've hit the same length as wave three, right? Which is that length there, right? So in and of itself, wave five may continue to levels like 0.618, right? Would it be completely out of the question and surprising if it did? Not really. When you think about how bullish people are, right, and the mania behind it, and some of the volatility that Bitcoin can create, I wouldn't be surprised. Now, as a minimum, you could target the 50%, right? The 50% being at what, 32,930, or the 0.618% being around, roughly, just say 35,000, but it's about 36,000, right? Just look for round numbers or whatever. But I think the best way to look at it will be um, something that could potentially be a blow off top, right? Something that may produce a lot of the alternation at the lows, meaning that although wave one was weak, right, you could see A, B, C, D, E extended sideways for a period of time, right? And then finally, after all that, like the correction might even start to expand up in the process, just sort of expand to the upside a little before you get that final thrust up, which will look absolutely probably insane, right? And then it'll reverse suddenly with a blow off top. Okay. That's my guess. That's what potentially could happen here, right? It's either one thing or the other. Either this thing had topped already, or it's got the potential to just, produce a crazy move. All right. And then in hindsight, it'd look like this was a wave one, when really I don't believe it was that. I think it was just an expanded D wave. Wave one was short, which then gives the overall impression and look to the wave that it was a five wave move, but not in the traditional sense as what you would expect, but something that was just really just a bear market rally with absolute crazy buying climax properties, which would then reverse. Now, the other thing that I want to mention is that this being the case of this extending back something like, let's just say, for example, 50%, right? Let's use the less crazy version of this for this example, right? If we are looking at a 50% pullback, then the target for the wave C that follows would be not as low as 10,000, right? I think it'd be more like 12,000 in that sense, right? But in saying that, you just never know. The wave C might be longer. I'm not sure. Depends on what's going on at the time. If we're in a recession, you just never know how crazy that could get. But in saying that, also, we'd also see a bounce after that. So there'd be another bear market rally. So look, there's a pretty big potential that it might still extend to 10,000. And then would be expecting a wave C bounce. Okay, so I'm going ahead of myself for sure. I probably shouldn't do that, but just trying to give you an idea of what I expect to happen. And regardless of being wrong in my short, I still think that that's coming because it's just part of how this correction, is supposed to look. And if you look at the XLM idea, you can see that it's also in a similar situation. Um, and also, it'll be closer to the start of wave one, so then it'd be probably an easier short, probably like potentially like a shorter distance from, where there's proper critical resistance, compared to this. If it goes up to 50% and you're a trader, it's probably going to be a bit harder to have your stop all the way back up here at like 48,000 or whatever, right? So that's just something to keep in mind if you want to trade these moves up and down. But yeah, all in all, at this point in time, I think it's just about understanding the potential for a coil up, and it's usually that type of thing that happens. For example, if you look at this wave one here and you look at the final move, you see how sharp it is, right? You see how there was that spike up and then immediately reversed. Well, that spike up is the type of spike up that could potentially happen in this whole end move. And for that to happen, as you can see, most of the alternation and corrective processes look all choppy at the lows, but then they get really spiky at the top. So in terms of this move starting off, it'll probably start off really choppy, right? Maintaining that support level. And then as it goes up higher and higher, it'll produce this massive spike up move, which will be pretty insane, I think, followed by the type of reversal that you see here, but obviously falling down impulsively rather than this type of corrective move. A bit different, right? Just giving you an example. But yeah, that's the explanation for the chart I'll post next. So hopefully this has helped, and thanks for watching.